The options chain was so dead, like beginning of this week. I doubt it's improved that much. It looked like there was some like out of the money call buying. Ding ding. So Bears, I mean, I hate to say this, but like Bears kind of win here a bit. That's a big win. Anyway, yeah, Jimmy's got like a little bit of covering, but XRT is not on Reg Show. I would say XRT probably won't go on Reg Show until May OPEX, if it goes on at all. So I don't know. Upstart looks kind of tempting over the next few days because ETF FTDs are going to come in and they have earnings coming up on the 7th, which is the week after next. The Fed could fuck that one up though. But it's so illiquid, I don't see how they don't have to do some covering. Yeah, we'll go over the rest of those on Sunday once I have tonight's data. Let's see. So Bulgurk nailed the close. The rest of us just no. I hate that guy. It was slightly above the market maker's expected move, like 10 points. We never got the test of that upper trend. Although that trend's kind of weird anyway. Maybe that's better. Anyway, we didn't get the test. We failed it. This is kind of bearish, although we still really need to lose that 51.15 level for it to get bad. So we're still a little bit in bullish territory, but we did fall below that this 5100 calls, which makes all the difference in the world, believe it or not. And I suspect that they were sold. They were sold and they closed out of the money. Commodities flat. Nothing really interesting there. Dollar moved up pretty strongly today on the back of the inflation print, but yields moved down, which was strange. And this may have to do with other currencies buying into U.S. Treasuries in order to offset the gains in the dollar against their own currency. And so, sometimes when you get data that spikes dollar valuation, you'll see that like the top end of the yield curve gets kind of smushed down for a little bit, and that's other banks like central banks buying into treasuries. This was really interesting. Despite our move up today and the slight move down in VIX of 2%, correlation on the 1 month turned around about 4%, and also on the 3 month. So they're shedding some of the short vol and backing out of the dispersion, even though the market's moving up and vol's moving down. And that's odd, right? That's really odd behavior. Carry trade got smashed back into that upper like 880% area that we were at the other day. Bank of Japan's decision to not cut rates last night was not very good for this. I mean, we can expect this to continue to be levered up simply on that basis. Although it is getting really close to its all-time high at 893.268%. Inversely correlated to this is the forward yield of volatility. So as their overall leverage is reduced by rising dollar and rising yields, they're leading into the carry trade to offset those margin requirements and continue to short vol. However, eventually this has a cap on how much you can lever, and when they hit that, they're not going to be able to suppress vol anymore. And the demand for vol is obviously still there. So I don't think this bounce is very bullish simply because of that. Yeah, that's not updated. People are still holding onto their tail risk, right? Like we're not seeing everybody drop their tail risk like we normally do on these pumps. Like if you look back at like January, right? And even March, like early March into mid-March, those big pumps, like everyone just dumped all their tail risk. No one gave a shit. But now, we're pumping, but we're not seeing any of the tail risk like hedges fall off, which is probably also fairly significant. 38.96% of the S&P 500 above its 20-day moving average. Still not really a reversal, right? And this one was kind of interesting too. This is the end of the week now, so this candle's closed, and correlation still fell week over week, not as much as in the prior weeks, but still fell, negative 19.81%. So volatility and like spot VIX, cash VIX, and VIX futures are still becoming more positively correlated over time. Oil was up a bit. Gold seems to be holding 2350. Obviously, the hotter inflation today is going to pressure gold up a little bit more, and Japan's lack of a decision last night is going to increase some of those currency fears. We may see gold rise more when financial conditions get a bit tighter. And yeah, that's about it. But pretty interesting stuff. There's the yen. USD JPY at rapidly approaching, March of 1990 highs, March, April 1990 highs. This is really bad. They're one of the world's largest economies. Fixie bags heavy. Yeah, not the best time to buy them. I picked up a few like out of the money ones, but they got burned. Whatever. Not much. Charts show just how much higher USD JPY can go. Well, you start to get back before like pre-Bretton Woods and stuff, and it's not really very realistic. I don't think that's happening. Modern monetary policy has changed in the time span that you're looking at, right? I mean, modern monetary policy's changed since 1992, so maybe not the best example, but can it be pre-World War II at this rate? It's really bad. Indexes are kind of mixed outside of tech. Even within tech, there's some mixed results. Finance is not doing well. Durables, energy's falling. Energy's falling even though oil's going up, which is crazy. Yeah, this is and we're now pricing in 0.27 rate cuts. So we're barely pricing in one cut. We're just like 2 points over one cut into the end of the year. I clipped that giant rant from earlier for you guys that you asked me to. Anyway, I hope everyone has a great weekend. I'll see you Sunday at 12:30 p.m. for the members only stream, which isn't really members only, but only members can talk to me. And I hope everybody has a great weekend. Thanks for hanging out, guys.